So let me, yes. So today's class is on candlesticks, and I want us to identify first. We know what is a candlestick, what does a candlestick contain, and what are the parts of a candlestick. So for those who are writing, we can write a candlestick. A candlestick is a technical. It's a technical analysis tool. A candlestick is a technical analysis tool used in So you said it's a technical analysis tool used in market analysis. It is a technical analysis tool used in market analysis. And now, a candlestick, normally, we normally name a candlesticks using different various. Number one, we look at the color of a candlestick. We name a candlestick according to its color. Number two, or yes, we name it according to its color, where we have a bullish candlestick. We have a bullish candlestick. We have a bullish candlestick. And number two, we have a bearish candlestick. Bearish candle. We have a bearish candlestick, where now a bullish candlestick is normally represented using a blue stroke green. It can be either a blue or a green color candle, where now a bearish one, it's normally represented by a red candle. It is represented by a red candle. It is represented by a red candle. Now, after the color, the next thing that we can use to identify a candle, it's by its body. It's by its body, where we normally say the larger the body, the larger the body, just a minute. The larger the body, the higher the market activity. The higher the body, the larger the body, the higher the market activity, and the opposite now. The smaller the body, the less volatile, or the lower the market activity. So the body, it shows how the market activity has been. Then we have another thing to consider, where we consider now we have another thing that we consider. For example, we have it's called weeks. The weeks, where the weeks, they show the highest. They show the highest and lowest market hit. It shows the highest and the lowest market. It shows the highest and the lowest price. Yes, the highest price, highest and the lowest price hit. in a market. It shows the highest and the lowest price hit in a market. Now, a candlestick normally looks like this, without now talking of theory. Oh, acha nichore vizuri. A candlestick looks like this. Where here now, this is the body. The red part here now is the body, whereas hizi zingine zenye zinakaa tuvijiti, it's what we now call the wicks. This is a wick and this is a wick. And we've said the wicks, they show us the highest and the lowest. Sorry, I was saying, on a candlestick, the wicks, they show us the highest price hit, and the body, it shows us the intensity of the market. Now, going on a real chart, let me open a real chart, so as we can now see what we are saying. We are talking about the market. Going to a real chart. So, for example, you can see this candlestick here. You can see upper, you can see these candlesticks, they moved by forming large bodied candlesticks. Then when ikafika at a point where now the candlesticks started moving by forming small bodied. Now when these candlesticks, this market was moving by forming these large bodied candlesticks, that is what we call now, the larger the body, the higher the volatility of the market, and the higher the market activity at that particular time. And now you can see there is a difference. You can see there is a difference between this candle here and this candle here. This has a body, this has a small body candlestick. So meaning the market activity between this candle was a bit, it was low compared to the market activity at this particular time, because a candlestick, it represent the market movement of the market movement in that particular time frame yenye inatumia. For example, when you go to weekly, this is how this market has been behaving for 1 week. So like for a whole week, that is how this market have moved. This is on a weekly. And now when you go to a daily, this is how this market has been moving today. This is how the market has been moving today. The market has been very bullish. But now for this candlestick here, these 5 candlesticks are the ones that are now going to form 1 week candle. You can see like this candle here, this candle. Let me remove the drawing. You can see like this candle here, it has remained with 3 hours 36 seconds to close. Now this is how the market has been behaving for this whole week. Now hii candlestick imebeba the movement of the market from here toka Monday. Okay, so and on a daily, this is how the market has been moving today, meaning this one candle, it is a representation of how the market ilifunguka kutoka jana usiku hadi leo saa tano na around 50 something hapo. That is how the market have been moving. Then this 4-hour candlestick, it's how the market has been moving in the past 4 hours. Like you can see, we have said today's market is very bullish. You can see for 4-hour candlesticks, there has been a very bullish momentum. So each candlestick, depending on which time frame you are, it shows the market presentation on that particular time frame. If you are maybe on a 1 hour, that one candlestick is representing the market movement of the market in that 1 hour. If you are maybe in 15 minutes, it is the market presentation of 15 minutes on one candle. Meaning, how many candlesticks of 1 hour are going to make one day? How many candlesticks of 1 hour are going to make one day candle? How many candlesticks?
6.
1 hour candle.
1 hour.
How many are there? How many candlesticks are going to form one day?
24.
24.
24 candlesticks.
Correct. How many 30 minutes candle are there? Are they going? How many candlesticks of 30 minutes are they going to form a 2 hour candle?
4. 8.
Yes, 4. So that is how you unapiga hesabu. But now it's important for you to know which in which whatever time frame you're going to use. Know the stick to that time frame. Why am I going to say that? Because we are going to learn that maybe when doing your analysis, we start our analysis from a daily time frame, and now the lower time frames like the 30 minutes, 15, 5, those are the entry areas. Hizi zingine ni kuangalia the trend nini, but the entry areas of entering a market is at 30, 15, and 5. So with that, no, let me cut it. With that, we can say we have now started to identify what is a candle. Tumesema it is a technical analysis tool used in market analysis. Then you have said for you to analyze a candle, the first thing you need to look at is the color. Then we have the body. We have said the larger the body, the higher the volatility or the higher the market activity. And the lower the body, the lower the market activity, or you can either say this, the lower the volatility. Then we have said we have the wicks. We have said the wicks, they show the highest and the lowest price hit in a market, considering that time frame that you are using to look at that particular candle. Sorry. Now with that, we can now go to look into the types of candlesticks that we have. We can go to look into the types of candlesticks that we have. And now we have two types of candlesticks. We have two types of candlesticks. Types of candles. I've said we have two types. Number one, we have a bullish candle. We have bullish confirmation candles. We have bullish confirmation candles. Number two, we have the bearish confirmation. Bearish confirmation. We have the bearish confirmation candles. So we can start maybe with the bullish confirmation candles. So for these confirmation candles, we have said these confirmation candles, they are the candles that we use them to enter a market. For example, on a bullish confirmation candle, you said in a bullish market, we said the market moves by forming. In a bullish market, the market moves by forming
higher highs and higher lows.
Yes, we said the market moves by forming high highs and high lows. And we said on which place do we take where do we enter a market in a bullish market?
Higher low.
A higher low. So when we are talking about the bullish confirmation candles, these are the candles that we are now going to identify on a market. But For example, going to a real chart, I want a market that was very bullish.
In a bullish market. Want a market that is very bullish. You can see, like, for example, for this market, you can see this market was moving in a retrace kidogo, inapanda, ina retrace, inapanda tena, ina retrace, inapanda. So for such kind of a market, we have to identify mbona ikishashuka hivi, what was the indication if you were to take a trade in that particular market, what was the indication ya kutuambia sasa you have the green light, unaweza ingia hiyo market. Because I have said we have several factors that you need to look into, and that is number one, if you're in a bullish market, if you are on the right place, that is on a higher low. Then after that, you have to look now for a confirmation candle for you to enter that particular market. Now, these are the candlesticks confirmation. Number one, let's start with the bullish one. Let's start with the bullish candle confirmation. Bullish confirmation. And on the bullish confirmation, number one, we have a candlestick like we have a bullish engulfing. We have a bullish engulfing. We have a bullish engulfing. Number two, we have a morning star. We have a morning star. Number three, we have a hammer. We have a hammer. And we have an hammer. We have an inverted hammer. Now these are